All right. Hello, whoever cares about this stuff. I'm going to start posting these videos regularly. We're going to talk about fundamentals and we're going to talk about technicals. Today, I'm going to go over the technical things that I'm seeing in the gold market and have been watching for the last few years. So, right now, what I've done is I've plugged in the support and resistance levels that I consider to be the most important, and we'll break down how I did this and what they mean. And then we're going to go over some Fibonacci retracement levels. Yeah, and if you're new to this, try to pay attention. I don't know what's going on with my battery right now, but if you are very familiar with this, feel free to leave some comments to help me in my learning. But I've been doing this stuff for I got obsessed with this about 2012, and I've tried a whole lot of different techniques, and these are the ones that I found to be the most helpful. So, fundamentally, I'm bullish on gold because the central banks are just printing money as fast as they can because they're bankrupt, and thanks to all of the socialist policies that we've adopted over the last 50 years, we've reached a point in our economic situation that's completely unsustainable. I think the federal government has about $120 trillion in liabilities. Um, Everyone's familiar with the $20 trillion in debt that we have, but that doesn't even take into account the liabilities we have as far as pension funds, welfare, social security, on all of those things. So with a GDP that's at, I don't know what, 17 trillion, and a tax receipts somewhere around the 3 trillion range. Yeah, I mean, if you were making $3 a year and you owed $122 trillion and you were spending $4 trillion a year, I mean, your budget's not going to, it just doesn't work out. And so on a government level, they have the ability to create money to cover all of these debts. And over time, that hurts currencies. The U.S. dollar's lost 99% of its value since 1914, and I think it's just going to continue to lose value. Gold tracks the value of prices really efficiently. I mean, if you measured the salary of a U.S. general and compared it to the salary of a centurion, they're both about 50 ounces of gold, give or take, and that's going to be constant for as long, basically throughout all of history. Um, the price of a suit, a really nice custom tailored suit in 1900 was about 1 gold ounce, and now it's still about 1 gold ounce. So as we destroy our U.S. currency, we're going to see gold match that devaluation pretty well. And if you've been following recent news, the government just passed a $1.4 trillion deficit spending plan for 2020, and it's just not going to change. It's just going to get worse and worse because the government's bankrupt and it's promised too much money to too many people, and the only way to pay for it is by creating more dollars. So, with a long-term perspective on gold, that's what we're going to look at today. And we could look at a bearish perspective, but historically that doesn't make sense to me. So, this is what we're looking at. We see bounces over here in 2006, and we broke through it, and then we retested it, and we went up. We broke through the resistance at 1,000 we hit it in 2008, and then we dropped down into the bear market as banks were liquidating their gold to cover their margins. And then we started this massive QE program and drove the price of gold up to 1950. And you can see at each point we had a breakout, and then it drops back, touches support, goes up, finds some new resistance, drops back to the previous resistance as support, and it just kind of stair steps its way up. And since 2011, we've stair stepped down, hitting those same levels of support and resistance and using them all the way throughout history. And you can see currently at the 1550 level, we've got resistance from 2011 and 2012, and 2013. So it's not surprising that we're stalling here, just given a basic support and resistance lines on a chart. What do we expect from here? We expect either a break up to the resistance at around 1800 or another drop down to support at, well, we've got some good support at 1434 and some light support in the 1480 region. So that's the support and resistance levels that we should watch. And now we're going to get into the Fibonacci resistances. So if you're new to Fibonacci, this will be a good wake-up call. And to start, I'm going to clear all of these things, and I'm going to run a Fibonacci retracement from the beginning of the bull market in 2000 to the top in 2011. So we do this guy. We're going to put it somewhere around here. We're going to run it up to here. And I'm also going to add in the 26% retracement level because we're hitting it right now. So that's going to be 0.264. No, sorry. I can keep that one, but 0.786. All right, and now we've got all of the major Fibonacci levels, and you can see that even back in 2000, the 26% was a resistance level and a support level, and the same with the 68%, and the same with the 50%, and all the way up, and even the 78% or 26%, right? All the way up. These were resistance before we topped, which means that the psychology of the movement, it basically, the price knew where these support and resistance levels were going to be before we even hit this top in 2011, which is honestly incredible to me. And then we broke this level, dropped all the way down to 38, back up to it, down, broke through, hit the 50. And at this 50% retracement, I'll put a little circle there. That's where I got extremely bullish on gold and managed to get a lot of my family's money into gold and silver at 1150. And I think that'll be the lowest gold price we'll ever see again. And then you can see we came up and we bounced around the 38, and then we ran up to the 26. And that's where we're at right now, trying to break through that. We did break marginally above it and then got rejected. So right now we're just waiting to see, will price run all the way back up to here, to the all-time high, or are we going to retrace back down to this, support at 1430 to 1480? Or do we just stop at 1520-ish? We're going to find out. But this is a standard Fibonacci tool. And now what I'm going to do is I'm going to plug in the Fibonacci, which is a tool I've been using for about 2 years, because and you'll see exactly why here. So we're going to plug the Fibonacci fan in, running from the top in 2011 to the bottom in 2015, and we're going to zoom in on the weekly here. Zooming out, and you can see from the bottom, hit some major resistance at the 50% fan retracement, found support at the 62, hit the 50, broke through the 50, eventually hit the 38, dropped all the way back down to the 50, like on a dime, and I got super bullish right here, and I bought heavy long, and as gold went up, the miners didn't, and so I ended up losing a lot of money, actually. We hung around the 38 for a while, and in May last year, I was screaming to anyone on our economics Facebook group, if we break this level, it's going to be explosive, just like it's been at each of these other levels, and that we would run up and hit this 78.6% retracement level. And so right here, I have posts showing if we broke this, we would run up and hit this price level somewhere around the 1570s area. And that's exactly what we did. And I rode that up, and I actually got out of my gold long stock place here and went short And right here on November 10th, we bottomed, I think, and on November 12th, I got long again and rode all the way up to here. Should have got out. I did, and then I got back in because the Iran thing started, and I thought it might be a good enough trigger to send us all the way up to that resistance at 1800, but we stopped. And so now the question is, are we going to hang out here? Are we going to hold this level, or are we going to break back below? At which point a retracement all the way down to the 38 is possible, which would put us in the 1200s again. And that's just from a technical perspective. Will that happen? I don't think it will. I think we're going to get more something like this. But the fact that we did get rejected pretty strongly here tells me there's a lot of sellers in the market, and there's also a lot of banks who are heavily short, and they're going to want to liquidate a lot of their shorts before they allow the price of gold to move up. So that's where we're at. And interestingly, that fib retracement, the standard tool from 2000 to 2011, the 78% or 26%, I forget what this is, it lines up right here. It literally taps right there. So this is the last line in sand for resistance as far as gold goes on the Fibonacci retracement tools. So after this, if this gets clearly broken, I mean, we're going to all-time highs. There's no resistance until we hit 1800, and 1950 is just a hop, skip, and a jump farther from that. So that's what I'm looking at. If we zoom in daily, you can see, I mean, we hit that line and we're rejected from it. So we're still pretty far above the 200 daily moving average down here, the purple line, and we're pretty high above the 100 and the 40, but we did tap the 10. It's likely that this will get turned down real slightly, and RSI will reach oversold, and that could be a trigger for the next move up. What I'd like to see, let me clear this for you. Clear all of that. This is the bottom on November 10th to the top here. Now, obviously, we came down and hit 38%, which is normal. We're bouncing off of it. I would like to see a retest of the 50% or even the 62% retracement, or even the 78% retracement down at 1480, which would be an incredible buying opportunity. And you can see it's just sitting right on all of this support here on 1480. I mean, that's huge support. I don't think we're going to get that low because we have so much support right here in this range, 1520-ish, bouncing off here, right? And I'll zoom out, put a box there. So what I'm looking for is a retrace into this green box. Okay, now we did kind of hit it, all right? So we definitely hit this support here. You can see we're right on top of it right there. I'm going to zoom out. You can see that. Delete this guy. Right, so we did come down. We hit this support, but we're also sitting below this resistance now. So I think it's quite possible that we come down to about here, and that marks the bottom where we can actually test this spot. So that's what I'm looking for, and that would be a healthy correction in a healthy gold market. So if you have any questions, feel free to comment or message me. And if you have any things that you think could be analyzed a different way or a better way, feel free to comment that too. I love learning. So anyway, good luck with that, and I'll try to post pretty regularly as the markets change and we get more updates.